Good morning, everybody. All right, why is that not working? All right, you guys, if you could tell me if you can hear me, that would be wonderful, and then we'll get started. I just want to make sure. Just let me know in the chat if you can hear me. Appreciate y'all hopping on. But yeah, I just want to make sure that y'all can hear me, so let me know, and then we can get started. Got lots to discuss today, but I want to make sure y'all can hear me, right? Made some changes to my setup, so I want to make sure it's all working properly. Yeah, if y'all could let me know if y'all could hear me, we can get started. Let me just send it real quick in the chat. So we don't have any news, by the way. Hey, what's up, brother? Can you hear me well? I don't know why no one's in the chat. Yeah. Okay, beautiful. Thank you. Was that hard? I don't think so. All right, well, so with that being the case, I appreciate you, my freaking brother. I hope you've been well, by the way. I hope everything's been cool with your baby. Little blessing, right? All right, guys, so we can see how price has broken market structure like we've discussed the last couple days, well, last week or so. off the heels of the SMT we see here, off the heels of price rallying up as the new quarter started, the third quarter, just to then use that SMT as well as bearish seasonal tendency to then push price to the downside. It is interesting that the Dow, excuse me, it is interesting that the Dow is running higher so aggressively. The only way that I'll be convinced that we're going to continue going higher, at least given what we are seeing here, is if this fair value gap sends price lower and then we break down below this low. Right, that's when I'll start to be confident, given the aggressive smash lower here. This is a break in market structure, at least on the daily. If we go to the weekly chart, we can also see how there's a shift in market structure. We also have a breakdown below this fair value gap into this order block, right? So we're going to continue to monitor seasonality because it's had a huge impact. For those of you that don't know, seasonality is very important. We can also see how this is a weekly fair value gap as well. But again, if we see this run on stops here turn into price rallying up and getting possibly above this on the weekly time frame versus the daily we just looked at, that would also promote continued bearishness on the indices. But we'll have to see, right? Is this just coming to this fair value gap to drop lower and try to come and finish off the rest of this fair value gap down here, right? Is that what we're going to do and then go higher, which would result, or is this going to use this fair value gap to come down into here, which would result in this going higher, the indices? It would basically negate this whole drop and basically use that as a retracement only. So we're going to have to see what happens in terms of that perspective. But for now, we can see how price is going into this fair value gap on the weekly, on the DXY. We do have a previous week's low, right? So this could just literally be a run to a fair value gap to then go lower, which you can also consider identifying as this low here of this candle, this lower high. This could realistically turn into a mitigation block to send price lower using this down candle, right? So that's an observation. But again, if price was to break through this fair value gap, okay, and then break through the midpoint of that possible mitigation block I just identified, if it could break above the midpoint of this and close, then that starts to obviously negate sell side delivery if price shows no respect to these particular potential resistance levels, right? So that's kind of what we're observing, right? Price rallying up at the start of this week is obviously something we would like to see for the DXY if it is going to go lower based on power 3, because price doesn't just move in one direction, right? It positions and manipulates and does all this stuff to build up liquidity, all right? So yeah. Just looking at things. So we also have a new week opening gap here that we could potentially try to observe, right? Whoa. Where'd oh, right there. Can you guys let me know too? I have music playing in the background. If is it too loud, or is it like just killing out the background silence? I'm not sure how loud that is on your guys' end. So yeah, if you could let me know that too, that'd be wonderful. I'd appreciate it. By the way, if you get value from the content, from any of the previous content, and you get value today, as we march forward to the open price through the AM session. Definitely don't forget to like the video, support the channel, and subscribe if you haven't already, because there's a lot of people that hop on these that aren't subscribed for some reason but are regulars. Yeah, if you can subscribe if you do like the channel, I'd appreciate it. And again, don't forget to like the video. Right? That's the only fee for you guys to hop on these live sessions, is to just show that you like the video, right? And you like the channel. But yes, so we have new week opening gap down here. We can already see price drop lower to go higher, at least from Sunday and then from last night. So we see a very fast bullish London session. So that can be indicative of supporting the idea if this daily fair value gap I pointed out is going to hold, right? If that's going to hold and we see price smash through that, then obviously we see this as a potential manipulation just to pull up into the daily fair value gap, and then possibly see price drop lower. And then that would obviously, like I said, that would lead us to believe that this is going to probably go higher. But again, we have a bearish seasonal tendency, which has been on magnificent full display. Okay, so we can't disregard that fact, and the fact that price has been super aggressive to the downside for the indices, right? So we have to just wait for things to fall in line. Price on the indices are, specifically on the NASDAQ, it's reaching for another fair value gap on the daily, right? So things are kind of moving together, not really much of a symmetrical delivery when it comes to the intermarket relationships. It is Monday. There is no news. Okay. If I'm not mistaken, yeah, so it's an NFP week. All right. So keep that in mind. If you follow the rules and you want to have a clear process on how to navigate this specific type of like week and how to navigate it, like what should your rules be, right? Your rules should be, if you're an ICT trader and you've been in this camp for some time, it should be that you stop trading, especially if you're new. You stop trading up until Tuesday, end of PM session, or if you really want to push your luck, right, you can go till Wednesday AM sessions closed, right? But again, high risk. It's a high risk week. NFP week, you have to have a specific protocol to trading those weeks. Some people think that that is ridiculous, and they go in and trade these types of weeks. To each his own, I guess, right? But for me personally, and the way that I teach things and the advice that I give, basically focuses on having very strict rules around these times, because it's very, very, very highly manipulated. And if you don't even understand how to manage normal manipulation, what the hell are you doing, right? Why jump in front of the traffic, right? It's like jumping on a freeway, just like walking out aimlessly into the middle while cars are flying by you. Anything can happen, right? So, but yeah, so the overall view of things, like I mentioned, price has obviously taken sell side liquidity here on the DXY. It's now retracing back to a fair value gap, right? We've now broken above this high. If we get an aggressive push higher and we break through, if we smash through this fair value gap here and it just rages higher, then we can start to consider the fact that this may be a shift in market structure to then continue to seek buy side. Depends, again, on what happens from here. Now, if we get a reaction lower here aggressively, right, then that should impact this in the same fashion, but to the reverse, right? If this drops lower aggressively, breaks down below this low, we know that the bearishness on the DXY hasn't changed overall, and DXY will continue to likely seek this low from previous week, Another confirmation in terms of 3 PD arrays would obviously be the swing low here, and then obviously the midpoint of this, and then just the initial response we'll have from this fair value gap, right? If it just slides through it, then obviously there's not much to trust there, right? But if it hits this, drops lower, breaks through this order block, breaks through this swing low, and then breaks through the midpoint of this order block here, then that's 3 PD arrays to the downside that we can use as confirmation. Okay? And then obviously if that happens, then this fair value gap should not hold at all, and we should see an aggressive push higher. If you take price from this high to that low, you can get an equilibrium. So regardless, this retracement, like I said, if we're going to be bearish for the indices, we like this to occur, right? Ideally, we'd like to see this do the opposite and go lower if this DXY is going to be bullish and promote indices continuing to be bearish. But again, it's just a waiting process. And I've mentioned this before in some of the other live calls, that when you see a potential move possibly setting up on the higher time frame of a particular asset, the news events, the economic calendar, they can literally act as macros, right? Essentially. Because just like how macros deliver during the AM session, PM session, London session, so on and so forth, the economic calendar acts as a similar thing, provides institutional sponsorship and like a timing framework for higher time frame moves as well. So say we're looking for this fair value gap to then start delivering to the downside. Well, price may use a news event this week to promote that large range expansion away from that particular PD array. All right? I hope that makes sense. That's a very important thing that took me so long to understand. Nobody frames it that way, right? Nobody talks about it in that way. You know, they say, yeah, the economic calendar helps you schedule and do this or do that, but they've never I've never heard anyone say from their own perspective and experience that the economic calendar can act in a similar fashion as a macro for the lower time frames, but for the higher time frame moves, right? So take that into consideration, because it's highly effective. And, you know, in my private community, we see that constantly. We see everything that we teach here constantly on a daily basis, pretty much, right? So there's validity, right? There's also, there's heavy importance on validation and invalidation, obviously, because again, these videos here and in my private community focus on clarity. The only way you get to clarity is understanding the landscape, how to navigate price, and how to trust the things that you're trading, aside from the fact that maybe you won a string of trades or, you know, whatever the case may be. Okay? So yeah, right? Given that fact, or that tip, whatever the hell you want to call it, we could see how there's news events scattered all over. So I didn't notice this, but now I do notice this. Wednesday to Friday is going to be some craziness, because they're going to talk about federal fund rates. And if you've been here for any amount of time, you are pretty clear on the importance of the bonds and yields, right? Or the interest rate markets. Right? The interest rate markets have a very heavy impact on what takes place across the board. Okay? So depending on what they do here, that's going to have a very heavy impact. And then obviously, you know, it's no argument, but the non-farm payroll is also going to have some type of crazy impact. And it could dictate what the sentiment is going to be for the next couple weeks, possibly for the end of the quarter, right? That's a little too ambitious, obviously, but sometimes that happens, right? The impact from a particular news event like FOMC, NFP, federal fund rates especially have a larger impact and could be sustained, especially if you incorporate COT, you incorporate seasonality, and all the other factors that we implement to build clarity around a particular narrative, okay, which is higher time frame storyline. So it's very important, right? So this week is going to be very, very important. Not a week to push your luck, not a week to go and dive in guns blazing, right? It's more of a week to use as like a forecasting week, right? For the next couple of weeks. Obviously there's opportunities, and we're going to pull some opportunities out, as we always do. But just keep in mind the risk is more elevated. Okay, so taking a step back from the DXY and the other assets in the news, we can see how there was SMT here at these lows, right? But the yields, at least for the time being, are completely tanking. We had a order block and a breaker. We see how prices pretty aggressively taking sell side. We have SMT here at these highs as well. If you look at this, right, this is the importance of having all three of the yields and all three of the bonds, because then you get to identify specific cracks in correlation, or SMT, and then that can be translated to the other assets, right? Just keep in mind too, if you don't do this type of analysis and you're trying to be like that trader that just, I want to just focus on one asset, well, you're missing most of the picture. Because if you just sit here and just try to keep it too simple to the point where you're only looking at one asset, like you're not realizing or understanding the fact that the markets are connected. Like if one thing does something, it could have a heavy impact on another thing, either positively correlated or negatively correlated, right? Like being the opposite. And part of the bias, if you guys have been here and have liked what you've seen and have witnessed the consistency in terms of narrative, in terms of being able to almost every time find an opportunity that ends up being consistently in the green, it's heavily dependent on this type of analysis. These things help me have clarity, and it helps me get behind a setup and be confident even if I'm doing it live, right? Without it, and if I was just focusing on one asset like many people do, obviously I wouldn't be able to do the things that I do, and I wouldn't be able to share the things that I share, and I'd be uncomfortable like most people are, right? But there's conviction given by statistical probabilities and correlation and obviously deep fundamental analysis, which is pretty much what the interest rates are doing for your analysis. You're basically doing real-time fundamental analysis that's a real-time indicator, instead of having like another indicator like COT only that's a lagging indicator. Okay? So I say that because I've gotten a lot of questions as far as why these things are important. Why can't they just stick to one asset, so on and so forth? And you want to be thorough. You want to have trust. You want to build clarity. This is how you do it, right? At least from what I've learned, and been able to do pretty well, and have many students that have also either started to do well and are continuing to do well, or have reached heights that I didn't even reach in a short amount of time, right? It's, 4.5 years of being on the markets and dedicating my whole life to this stuff. So it is a process. It takes time. But I hope that you guys being here can help you not face the issues or some of the issues that I have faced, to kind of speed up the process, right? But yeah, so we could clearly see that things are dropping. There was SMT at the highs. Things don't look like they're turning around anytime soon. That is indicating to me that we will see the DXY possibly use this fair value gap to then tank, and then that may turn this to continue its move going bullish. Okay, the uninitiated trader that only watches the news or doesn't understand 99% of the things we talk about here probably think this was like the world's ending, and it may continue to go lower at some point. Who knows, right? But this is not the world ending. So the framework that we've painted and things that we do here would allow us to be flexible if we do, like I said, break through this fair value gap, contest this order block, and then if we get up above this high here, then that's pretty significant for us to continue going higher. As a result, then we should see this drop lower, especially if the yields are going to continue to go lower and the bonds end up going higher, right? Bonds going higher promotes bearish DXY, bullish indices. Yields going lower promotes bearish DXY, bullish indices. Okay, so if the yields are dropping and the bonds are rallying, then you have a good indication internally, in terms of the inner workings of the market, that the indices will go higher and the DXY should hypothetically go lower. Okay, so I hope all that makes sense, because that's context, right? That's deep context, that's deep understanding of the relationships between particular asset classes and their relative cousins, right? That dictate what they do. All right. So again, clarity comes from that type of process. All right. So yeah, we're just gonna have to see, with those observations in place, how NFP is gonna affect this week, and then the federal fund rates, because that is going to dictate, in my opinion, what we're gonna do for the next couple of weeks. So given that statement, you can see how higher time frame analysis and fundamental analysis, when it's done properly, right, which is what I try to do my best to get you guys to understand, when it's done properly, you're able to trust narrative specifically, for a longer period of time. And if we're bearish, if the narrative is bearish on the higher time frame, and you see a run higher, but you have all this other context that I just mentioned, then you're not fooled, and your whole idea of what you see happening in the market won't change so sporadically. And then guess what? That brings clarity, then that brings trust eventually, and then you can obviously have more conviction behind your ideas, and not guess. You're pretty much laying out the actual important things that pushes price in one particular direction or another. So yeah. So Euro seems like it's dropping, right? GBP seems like it's dropping, right? We did come off this low, so again, we just have to see what's going to take place here. Equilibrium's up here. We have a shift in market structure. We have a fair value gap that's been violated. If we go to the weekly time frame, see what prices reach down into, right? We have this fair value gap here from the weekly. Just label that real quick. Okay, so that's going to be something to monitor. Do we stay below the midpoint of this? Right, that's going to be key. Okay, we do have this down here. Not that this is important right now, but it's just an observation of what is at play, right? And if price does choose to try to tank, and then we see DXY go bullish, then that would be what we would use as a potential target, right, for the potential bearish idea, right? But it's not, in my opinion, fully justified to be bearish just yet. We see how there's like a coiling effect happening here. If you go from this high to that low, you could see that sell side was taken, significant buy side was taken. So since 2023, on the 17th of July, since that time period, or even, from that time period, once that range was created, you can see how equilibrium has been holding price, right? So the euro has been held at equilibrium for almost an entire year on this higher time frame. That's significant, right? That shows you how price has been behaving on the higher time frames for the last like year or so. Okay. So why would that be important? Right? Because that promotes a little bit more difficulty in this particular asset. So if you've had a rough time trying to get in line with large range moves, although there has obviously been some, you can see how the overall structure in the currencies has been very controversial, right? Given the politics and all these crazy things going on worldwide. But that's, it's kind of like an argument for why you should consider not, demanding, but you should consider looking at other assets, indices in particular, because obviously all the geopolitics are messing with the currencies, right? So, I guess some side notes, right? But yeah, so we can see how this order block is here. We have a midpoint of that order block. We have some lows here, some lows here. Before that, we have a low here. We've now taken out these lows. Price is returning back. If you look here, we can also see there's a 2-week fair value gap in here. Sorry about that. Give me 1 second. So yeah, we could see the overall large range that we've been dancing in. If you have paid attention for the last couple of months, especially if you're in my private community, you're going to know what I'm about to mention. So the liquidity list, some of those on the list, in particular, or particularly to this time frame, right, we could see how this was June's low, right? And then we can see how this was June's high, right? So you can see how that monthly high was taken out. And now, since it did that, price retraced off of this rejection block, okay? Also in conjunction with this order block, right? So this move is justified, and price is now reaching down into this fair value gap, okay? So liquidity near term would be this weekly low, this weekly high, okay? So if price is going to make a move, right, it's going to, if it's going to make a longer term move that's extended, it's obviously going to have those as possible liquidity to aim for, depending on where it tries to go. Again, we're at equilibrium on this 2-week chart, so price may not want to do much, right? Again, there is moves, but you just have to know what's happening in front of you, okay, before you can get to the lower time frames. That's part of clarity. It's not just about the 1 minute, 15 minute, so on and so forth. And because there's no news, obviously, again, if you've been here for a while, because there's no news, we don't look to try to engage before 6:30, because we're trading likely within the manipulation, because there's no news, right? Yes, there will be possible moves that take place, but again, we want volatility, right? We want injections of volatility, and we want to get a feel for what the landscape looks like, especially because it's Monday and NFP week and federal fund rate week. We don't want to just jump into the pool not knowing if there's sharks or vicious things awaiting us to completely catch us off guard. So yeah, if DXY was to tank, obviously that would push this higher as well, and then it would be using these discount arrays as support to then go higher. Okay, but yeah, the overall landscape, what we're looking at here, seems like it still wants to favor going lower. Okay, we do see this low here. If we look at the highs here, maybe we could try to monitor some SMT. Doesn't seem like there's any SMT, at least from the time frame we're looking at here. right? This was a pretty massive retracement. If we take the most recent swing low to the most recent swing high, that was energetic. Again, oh, I already have it right here. Okay, so it looks like it's just literally broke through that possible range that would promote a strong continued bullish run higher. Okay, so that's just another thing to consider. Again, we're still inside this weekly fair value gap I mentioned. Okay, right here. So we do want to see what the response is going to be from there. Then we also have the fair value gap here as well, right? So in terms of the currencies, we already got the bonds and yields, right? In terms of the currencies, it looks like we have pulled off this low. It has been pretty aggressive to the downside, so that's something we are going to consider, especially with the seasonal tendency. And then obviously, seasonal tendency, like I mentioned for the indices, has been bearish. We had a large range expansion to the downside. But again, things really are going to be dictated by what happens inside this fair value gap here, especially with the federal fund rate coming on Wednesday. And then obviously NFP being NFP, that can trigger some type of higher time frame range expansion from a particular level. If everything stays as it looks, right, like in terms of this possibly retracing to go lower to maybe seek this previous week's low, the wick quarters, right, quarter points of the wick, or aim for this fair value gap, right? If we do get a response from these news events that pushes us lower here, this will be short-lived, and this order block should hold price if we do stay above the midpoint. Now, if we get this retracement to this fair value gap I pointed out, right, this one here, whoops. If we get a fast response from here and then we see DXY continue to go higher, slicing through this with no effort, then obviously we could frame out ideas related to that. But just given what we see here, right, this is a huge bearish move. So again, it's not unreasonable for this to retrace. I did mention this last week in my private community, right? If price is going to want to continue going lower, ideally, what we would like to see to start this week is to come up into here, right? I wanted this candle to come up into here, but it didn't. We had an inside day. So now that the new week has started, price has now continued that sentiment to go higher to reach for this specific area here. Notice how price had an expansion to a PD array, very large expansion, and then it had a fair value gap that was left. Okay, so price is only going to do one of three things. It's going to attack some form of liquidity. It's going to create rebalance or retrade to some form of a PD array or like fair value gap, order block, right? The list is, the list of PD arrays, right? Or it's going to consolidate. Okay, so what has happened? Price expanded to attack some form of a PD array and attack previous lows. Okay, so it already did that significantly. So if price is going to want to continue going lower, it doesn't just move, as you can see, one-sided forever. They like to do retracements, which in all honesty are just moves that pull smart money to more logical premium levels short term for possible sells, or down to discounts if it's going to continue possible buys, right? So that's like, in all honesty, that's, in my opinion, what retracements are like, and it's kind of just what they're doing. They're pulling in liquidity, they're retracing to better levels depending on their bias or narrative overall, and it's also engineering losers because everybody's trying to sell thinking the world's ending, like I said, right? So what is the sentiment? Everybody wants to be bearish. Little did most people know that there's a heavy manipulation factor that takes place, and part of retracement is also kind of manipulating against the overall narrative. Okay, so again, I'd like to see this come up into here. Do I have? Yeah, I have all three indices here. So if one of these gets up there and it doesn't show like two of them are trying to do the same thing, that could create an SMT, right? Especially if we see the DXY continue to smash higher, right? if this SMT here stays present, right, which is this fair value gap here, so we could see how the S&P has hit it, right? We can also see how the NASDAQ has not hit it. And then we can also see how the Dow has hit its fair value gap to the upside. Okay? So we want to monitor what this is going to do. Is that going to be supported by the DXY and the bonds and yields, right? If this SMT is going to be supported, then we would want to see eventually in the next day or so, we'd like to see DXY going higher, the yields going higher, and the bonds going lower if we are going to promote this SMT that's possibly getting created to then go to the downside. Hope that made sense, right? It's a bunch of different factors, obviously. But again, the whole point is clarity, right? We're not here to be signal junkies, okay? And people that are here for a short time, we're here for a long time, okay? We're trying to be well-rounded, educated, lethal traders. That doesn't come from signals, signal services, so on and so forth, okay? So, yeah. So that's kind of like what I see in price so far. I'd like to obviously see it go higher if we are going to be bearish. I'd like to see the other relationships to the assets I've mentioned take place, right? If we are going to be bearish, we want to see yields going higher, bonds going lower, DXY going higher, right? Again, that promotes this SMT that we are currently experiencing to be valid, right? It promotes it being valid. But again, there's a lot of mines in the minefield of news events this week. Very heavy news events. And because, again, there's no news today, so we don't push trades on Monday, right? We don't do it. We don't do it. All right? It's just part of the rules, okay? So yeah, now I hope that the higher time frame views make sense, because with that out the way, we could now start to get a little bit more refined. Okay? Let me just log into my broker, just in case, just in case. Alright, so it was pretty fascinating too. Something I've noticed, because I have AMP futures. When I first got my AMP account, before ICT started mentioning AMP to the whole world, there was like 9,000 accounts. It shows how many accounts are active on the broker, on the login. Now it's at 16,000. So in the last year, like 6,000 people have a personal account, which is awesome, right? Those 6,000 people, well, maybe they have funded accounts too, but those 6,000 people have took it upon themselves to have full control over their money. You know, I don't give you financial advice, obviously. Oh, I forgot to do this, actually. Damn, I just noticed that the lag is a bit intense. Holy shit. But yeah, so with that out the way. Sorry, you have to do it. You have to show disclaimers and stuff like that, right? But yeah. So again, with that out the way, let's now drop to the 1 hour, right? Now things are going to start getting juicy, right? Again, like I said, the expectation when we hop on Mondays, especially if there's no news, or any day that there's no news, right, up until the open, okay, we're not taking trades, okay? We map out scenarios, and then we figure out what the hell we're going to do, just like you getting a map before you go on a trip. Okay, you don't just start driving and winging it, right? You have to know what you're doing. You have to figure out what is happening. You know, why should something do what it's trying to do, or what you think it's going to do. All right, so again, given the DXY being inside this fair value gap, let me label it so you don't forget. And so, given the fact that DXY has rallied up there, right, again, we're inside that fair value gap. So we want to see what the response is going to be. Because again, that will have a pretty heavy impact moving forward. Let's go to the daily here. So again, we have this down candle here. We want to see we want to see how that responds. If price does retrace, we want to see how that's going to react. Because if it just slams through that, obviously, the overall narrative with price going lower potentially for the DXY will start to be very much clear. And then as a result, we should then start to see this order block hold and push price higher for the indices. For now, just based on what we're seeing in price, what we have seen with the fact that price has just tanked so aggressively, we don't push buys again until we are totally proven that that is what's going to take place. Okay, so again, we're favoring sell side liquidity, right? And obviously that may change, and we will be here for it, right? So yeah, I would like to see this possibly use this fair value gap to then continue to go lower. And then DXY as a result should end up going higher, not respecting this at all, right? So that's what I'd like to see, right? But again, if this response from this fair value gap tanks aggressively, then obviously we'll probably see the indices go higher. And so those are the scenarios. I, again, am favoring one side. I'm favoring price continuing to sell on the indices until proven otherwise, just based on the fact that this has been so aggressive, right? So if price was to go higher and then maybe the quarter ends bullish, the quarter started here, so 3 months from June 16th, right? 3 months from then, so it's like what, one more month up going into August. If it does end up being bullish and gets up above the highs up here, then obviously that turns into the observation of bullish power theory for the quarter we're currently inside of. Okay, but as a result, from what we see here, it seems like it's gonna not be a bullish quarter. We've had many bullish quarters already, but this third quarter, at least in my opinion, should continue to tank, right? So I'm favoring sell side. We're about to go into the open soon, so be prepared for that. If you have questions, let me know. Because from 5:30, when there's no news events, if you have a lot of questions and you want to spend some time talking about those questions, just keep in mind, if you are a regular that hops on these live calls, when there's a day where there's no news and we're going live, or you see me live, that is the time you can start dumping questions and we could really get into it. Unless, of course, you're in my private community, which, we deal with all kinds of stuff regularly. So yeah. So yeah, we're gonna continue to monitor what this is going to do. Again, if we do continue to see this sell side delivery promoted, because there's also seasonality that's on top of this sell-off, which pretty much supported the SMT we pointed out before it happened, right? So if this does continue to short and DXY chooses to continue to rally, seasonality is promoting for the indices bearishness. So it just logically makes sense why this occurred. Just another one of those elements that gives you clarity. Okay? Again, that's the whole point of this channel and our interactions together. It is not, I repeat, the goal of this channel is not to be a signal provider giving you the inclination to be a signal junkie. Okay? You should be here to learn and take away what you can. You know, there are signals, obviously. There are situations where we're calling out trades, obviously, which have been highly accurate. If you've been here since I started doing things on YouTube, we've lost, I think, 5 trades in total out of like 3 months at this point. So I'd say that's a pretty good comparison or a pretty good performance, if you ask me. Then obviously that's aside from what I've called in my private community. So yeah. But the whole point obviously is to get you to learn, not to have you solely dependent, right? I appreciate you guys hopping on, and yeah, I hope this is used as a resource for you guys moving forward. I appreciate the interest in the channel, and if you do follow the channel and you're not in my private community, but you've gotten value and you're improving in your trading, I want you to DM me on Instagram or leave like updates in the comments. I'd like to get to know you guys that do support the channel, that have chosen or just, you know, can't be involved in the private community. I still want to keep updated with the progress you guys make and the things that you deal with, right? So then I can further help you as well, aside from my private community, right? And I just want to see what you guys do, you know? It's always fun for me to see improvements. It's the whole point of why I'm even here, right? I could just be doing what I used to do and just sit by myself, you know? So trading's funner when you have people to share it with, you know, that actually understand, that aren't going to judge you, you know, just because you're doing something different, you know. So yeah, again, we're looking for this response here. We want to see what happens. We've taken buy side relative equal highs, which is basically previous week's high. We have previous week's low. Right, so we've triggered out a pretty significant liquidity pool. Right, so we want to see what the response is going to be from there. Again, there's an order block here. It's going to flip through different perspectives and see what's going on. So let me actually label that real quick. This is going to be part of the walk forward evaluation for validation. Whoops. So we've got the order block here. We have the high of the order block, the body. Then we also have the midpoint, which again, if it doesn't show much of a response and it just slides on through that, then obviously that starts to give us inclination to consider ideas that may go lower. Okay, but yeah, again, I want to favor sell side because of what we've seen so far. It is the end of the month, so that's another added effect to the higher than normal risk exposure, and you know, could promote lack of clarity. I feel like we are pretty clear in terms of what we're looking for. We're not sitting here wondering aimlessly, all right? I hope that you guys see that the process is fairly simple. There are a good amount of pieces, but just like, anything else that's technical, for it to work, obviously there's elements that make it work, right? Basically, your trading model, the things that you do, you're creating your own algorithm, right? Because when this happens, then this should happen, right? If I see all these little confirmations, then I should see this happen and I should do this or that, or not do this or that. Basically, it's an algorithm. We're waiting for particular things to take place to then make a decision, right? So yeah. So yeah, if you guys got any questions, let me know. And then if I'm explaining something and you're getting lost, let me know that as well, so then I can backtrack and maybe re-emphasize whatever it is that you're stuck on. But if everything makes sense, then obviously, we're just going to sit here and wait for what price is going to do, observe the possible response we get from this particular area. Actually, let me do this real quick. Okay, let's do this. Let's put them all individually, just so you guys can get a even larger picture versus just having the split. So yeah, again, we have pretty beautiful previous week's low here. We don't really got to mention previous week's high because it's already been taken. Okay, so it's already taken that. We can see. So let me point this out as well. The overall narrative, right? If price was to turn around and be bearish, looking at this, if it does choose to tank and then we see the indices rally, obviously as a result, based on all the things we've talked about from that higher time frame, hopefully this will make a little bit more sense, right? And emphasize the reason that higher time frame analysis is so necessary and important. If that overall reaction ends up being bearish, okay, if it ends up dropping using, and this is still active, right? If it drops and this is still looking the way it does, this consolidation to rally to then drop lower, seeking previous week's low, could have the framework for a market maker sell model, right? Consolidation. There's probably a first stage accumulation somewhere in here if it does prove to work out that way. Then second stage accumulation here. Then maybe smart money reversal was used at this daily fair value gap, right? To then continue to drop. Right, when there is a market maker buy or sell model, the smart money reversal, like in this case, if it's a market maker sell model, the smart money reversal is generally going to reach for a higher time frame PD array. Okay, so it's the daily time frame retracement aiming for, in this case, a daily fair value gap. Well, when you take that information and you drop down to the further details of that daily time frame retracement, in this case a bullish retracement to then possibly go lower, when you take the higher time frame down to this lower time frame and you see something like this occurring inside that narrative, you can now paint, if you see an aggressive move lower from that higher time frame PD array, you could paint a pretty clear picture in line with the overall narrative, right? And then you can also, if you're anticipating a possible run higher inside of a bearish market, and you see a higher time frame PD array, you can anticipate where that buy side of the curve will be in the market maker sell model, and where the smart money reversal could possibly take place. So you can start to see how market maker models can also be used to target or build a deeper understanding of the details targeting a particular higher time frame PD array. Okay? Right? So starting the week, if we're bearish, also another layer you can add on to this idea, if we are in a bearish move, right, just retracing to go lower, you can also think of power of 3, right? Not only for the day, right, because this day showed a bullish power of 3, obviously, reaching for the daily fair value gap. But you can also see the weekly characteristics, right? The weekly power of 3. Prices retraced, right? It dropped or consolidated for the start of the week. Then it rallied up to this daily fair value gap, right? Above the Sunday's open price. So again, if it does look to prove that this market maker sell model is going to take place using smart money reversal characteristics from this daily fair value gap, you can also start to paint the bearish weekly range, right? Inside that higher time frame retracement, right, to the daily fair value gap in a bearish market, to then obviously walk forward throughout the rest of the week with a market maker sell model possibly, bearish power 3 possibly, all under the umbrella of a daily bullish retracement to then go possibly bearish and seek sell side. So that's like, I mean, I guess you could say that that's kind of an advanced perspective, understanding how price uses different things from higher time frame to lower time frame, and how those time frames have a little dance going on, right? If it's a daily bearish trend and we see a bullish retracement, that bullish retracement has a context within that higher time frame narrative. That's why earlier I said what I said, and why I always start with the things I start with. Because if you get a higher time frame view and you get a feel for what the hell is happening, then you're able to go down into the lower time frame and figure all this stuff out. If you just stick to the 1 minute or 15 minute, so on and so forth, you literally remove your ability to have this type of deep attachment and context to what is actually happening narrative wise. And then obviously that leads you to getting beat up and confused over and over and over again. And then you start thinking a bunch of negative crap, and it's just not necessary. Right? So yeah, I hope all that stuff made sense, because that is like, I mean, so important. I mean, pretty much everything that we talk about here is so important, right? But I hope that made sense, because that's like a high level of price navigation, high level of understanding when it comes to narrative, from higher time frame to lower time frame, the impacts that higher time frame has on the lower time frame, how price dances and has different stories within the larger time frame story, and then how you can also drop down and start possibly building frameworks from higher time frame to lower time frame, right? So yeah, again, if we do want to see the indices drop, like I said, I want to continue to favor until we're proven otherwise. If we do see or want to see that happen, we do not want to see what I just talked about play out. We don't want to see it present this as a market maker sell model that continues. If it does choose to possibly present the characteristics for a market maker sell model, say it drops and then wicks down here, but that promotes the retracement for NASDAQ or something to get up into the fair value gap, that's permissible. We could use that. But we don't want to see it spend too much time down below this low. We'd like to see it expand aggressively and then attack deeper into the daily fair value gap and essentially not have the daily bearish fair value gap hold, right? That promotes a failed market maker sell model, because sometimes that'll happen, right? If this does have the characteristics of a market maker sell model, the whole context from the start to where we're at now, to the smart money reversal, right? But if bullishness continues, if it proves to be bullish the rest of the week, right, then this would, in my opinion, go down into here. I'd like to see that happen. If we do continue to be bullish and we are going to continue to stick to bearish indices, I would like to see us drop down, sweep out this low, because what's below that? Sell stops, right? So it would sweep down there, then rally higher. We also have a daily bullish order block I pointed out earlier, right? Inside that daily bullish order block, okay, this is the midpoint of that daily order block down here. Okay, this is the high, this is the body, that's the midpoint. Okay, so yeah, if it does, want to drop down there, hit this daily order block, if the context stays bullish, if we watch it close bullish on the week, we'll then be able to also see that this daily order block didn't allow price to continue this lower time frame potential market maker sell model. Okay, we can see how that is a barrier, right? See, again, I hope most of this stuff is making sense to you guys. I really do, because it just, I don't know. Like, even me just like saying this stuff out loud, it seems like super clear. And it may just be my experience with this stuff. I hope it clicks, at least some of it, right? Because it's just like building blocks, So, and again, if there's ever any topic that gets talked about that strikes you with confusion, don't hesitate to voice your difficulties. Okay, so we're approaching 6:30, so we should be able to see some type of price delivery. Right, something that makes sense. Okay, so let's see. So yeah, if this is going to continue to sell off, again, remember what I mentioned about the three indices. We have an SMT at the highs here. If DXY retraces here and then rallies, this will likely promote the sell-off. Again, it's Monday. I don't anticipate the weekly high forming on today, right? I don't really see it happening. It may happen. It may very well do so. But, we're not going to know until things start to fully deliver. Okay, so again, my favor is to the downside for the indices. Right? So that's the lens I'm going to be walking forward with. I painted out different contingency plans for that changing and what we would go off of if that did change. Like, say, the indices ended up going bullish, and then we saw the DXY present this with the market maker sell model, right? Say it smashes through that. Then obviously we're ready for that as well. But I'm favoring, given what we've seen, given the seasonal influence, that price may want to continue to be bearish on the indices. We do also have to consider that it is the end of the month. The whole month has been bearish. So it's also not unreasonable for us to see the monthly range close off of this low that we've created for the month of July. So even seeing a deeper retracement into this fair value gap on the daily time frame, even that would make sense, because it's the end of the month. And remember, there's power 3 across the board on everything, all the way down to the 1 minute time frame. Power 3 is taking place based on those those 1 minute candles. Obviously, the 1 minute candle ranges are less important than, say, the 1 hour, which is very helpful in painting the daily ranges and the weekly ranges. right? So, but yeah, again, there's power 3 across the board on every time frame. The higher time frame is more important for context, obviously, in identifying the overall narratives. But yeah, so we have the news, or no news, but we have the open price coming out soon. So let's see what the response is going to be here. We do have a shift in market structure after taking buy stops. All right, so again, I'm favoring sell side delivery. Okay, if we come over here and look, let's continue to monitor. Let's switch around, see if there's anything useful. We do see this order block here. Let's watch and see if that holds. It seems like the daily order block, bullish order block here, has held. Let's go look at the yields, or the bonds. Bonds look like they're continuing bullish. Yields look like they're kind of retracing. So let's let price deal with this open for a little bit. All right, so if this breaks down below this low here, we will then have a breaker to possibly go off of, bearish. Okay, so that would be pretty decent. These consecutive down candles, like you saw on the other time frame, is a bullish order block. So we've already smacked through and closed pretty much below the midpoint. We have a fair value gap down here that's below equal lows. All right, again, we have the SMT at the highs. So again, I'm pretty confident that we're going to continue to go lower. Like I said, I'm favoring sell side. Right, we've been saying that since the start because of multiple factors. Okay. So yeah, again, that SMT seems to have continued to give a pretty heavy impact to the downside. So let's see if that continues. Let's make this full screen. So yeah, like I said, this was an order block. You can also see that actually ended up being a breaker too. And one of my rules is I don't take trades right at 6:30. I just don't do it. Seems like our overall narrative and bias is coming to fruition. Let's see what the response is going to be from this low being taken. If it breaks through that low and comes back, this is, like I said, a breaker. Bearish. If you look down here, you can see that there's a fair value gap. So if price is bearish and it's going to attack that previous week's low, right, if it does prove, once we get this manipulation out of the way for the 6:30 open, if it does prove that it wants to favor going down here, if intermarket relationships continue to promote sell side, then obviously this could end up being the target for the day. But we will see what happens. Okay, I like the SMT. I like the overall narrative we've painted. I'd like to see the yields go lower continued. And then obviously the bonds go higher continued while we try to engage if an opportunity presents itself. Okay, so let's drop down to the 5 minute. So this is a large wick. I really don't like that too much. So think about this. If you did take an entry here, maybe you took the 550 to 610, or you looked at this as a favorable drop, which you very well could have. If you didn't take profits and accept whatever this was, I think it's like maybe 60, 70 points, and you just held it, obviously they came back aggressively. This is the exact reason why I wait and I don't allow myself to take entries, even if I'm correct at 6:30. or especially if there's no news event, I definitely don't want to take it before 6:30 because that's just the way it is. Okay, you'll notice that most of your losses probably came from before a particular time element was met, right? So I know that was true for me, right? So let's see what happens here. We have, like I pointed out earlier, we have this. So let's see what's going to take place here. See, it seems like we had an immediate rebalance and left equal lows on the NASDAQ. So yeah, if we can get DXY to continue to press on higher, right, then obviously that's ideal. Right? Your targeting protocol should be very slim. You should be targeting very small targets on these days. You should not be here trying to push your issue too hard. Be a logical, reasonable human being. Okay, know the things that we've discussed and act accordingly. You see how there's an SMT here? This high to that high. Bearish SMT. Seems like the DXY may continue to favor price going higher. Again, I'd like to see us sweep down below this low first, but it may not give it to us. It may just go rapidly and just use this, right? These lows, and just continue pushing higher aggressively. Right? Yields are running higher. If the bonds do choose to continue to reject from the highs here, there's also SMT at these highs, right? Higher high. Right. Higher high made, lower high made. Right, so if this is to go off the heels of this SMT I pointed out last week, from here, if it does choose to pull up higher than that, again, promotes the indices to go lower. Right, so again, we want to just let this continue to breathe a little bit. We can see that there's been some craziness. Right, so let's just see what happens. So we do have SMT here that's been seen. Very large drop off in the Dow. So yeah, I'm pretty convinced because we went into a fair value gap on the daily, if you remember from earlier. We hit this fair value gap at a premium, and now we've come off very aggressively. We also have lower high on the NASDAQ, promoting the fact that the NASDAQ is the weaker of the three. So if sells are going to take place, the NASDAQ is what I'm going to want to prefer. Right, so let's see what happens. We've now ran up above this high that was created, manipulation, right? So let's see how this breaker is treated. Is it a breaker? Yeah. I like these equal lows, but again, there's SMT at the lows, there's SMT at the highs, NFP week, FOMC, or not FOMC, but NFP week, FOMC too, yeah. So we got 3 prohibited news events this week. We got rate announcements, we got FOMC, non-farm payroll, right? So again, that's not something to be worried about, but it is something to be cautious about, right? Just like if you are crossing the street, right? you need to look both ways. You don't just go right in knowing that there's a risk, an elevated risk if you're by a street that's busy. You know, you got to take extra precautions and slow your roll, right? So yeah, we have a massive Kraken correlation between the indices as well. So let's see how that will affect things. DXY is rallying as well. So yeah, so, you know, this is a very common thing on weeks like this, especially this week. I think there's only a couple times a year where all three of these insane news events occur at the same time. Plus, we're at the end of the month. Plus, for the month, price has hit higher time frame PD arrays, and we're closing the month, so they may look to come back into the range for the month, right? It's been a bearish month, so I wouldn't be surprised if we do try to get up above here and take out the rest of this SMT. But because it's there, because DXY is running higher, right, we want to continue to keep the tactics we employ in place and just observe, okay? And something you have to realize as a trader is most of the time, like 80-90% of your engagements in the market are going to be related to preparation, right? And observing and monitoring, like a sniper. You know, snipers aren't out there getting all the action. They're not just shooting everything that moves like a, you know, person that's on the front line. Like, you got to be much more calculated. Otherwise, you'll get your head blown off, right? So yeah, let's see what happens here. Again, I wouldn't be surprised if the DXY right now does choose to drop a little bit. Okay, so take this into consideration too, like I mentioned. This consolidation here can turn into a market maker sell model. You can even, again, use market maker sell model framework to frame out us retracing, even if it fails. If it fails, then the sustained sell-off on the DXY won't take place, and it'll fail. The market maker sell model would fully fail, right? Maybe it would get down below this low here, which is another thing that makes sense, obviously, because there's stops here. All right, what kind of stops? Sell stops from what session? London, right? So if they're going to try to run higher, there's stops below here too. But if they wanted to really screw people, dig to a real serious discount based on this range, they can come down, sweep them up, position themselves, put their entries into the marketplace, and take advantage. So yeah, again, there's S&T I see on the NASDAQ bearish. Okay, so S&T. Go to the 5 minute, you can see how this went higher aggressively, this went lower aggressively, but there is S&T at the lows too, right? So when there's two S&Ts, you got to use the bonds and yields, right, to get further context, and then use a DXY. If the DXY is rallying, then S&T bearish is what we would potentially favor for the indices. Now, if DXY is bearish, we would favor bullish S&T for the indices. Okay, so I'm going to want to continue to monitor S&T's at the highs. Yep, with the yep. Yes, sir. Yeah, what's up, Nico? Hope you've been here for the whole call. Talked about a lot of stuff. Appreciate you hopping on, brother. Gonna have another spectacular week, hopefully. I don't have too high of expectations because, again, all the stuff I've mentioned. We have FOMC, rate announcements, and the lovely NFP. So it's about to be a slaughterhouse from what I understand. So yeah, now we see things starting to somewhat favor price going higher. DXY is stalling out. Yeah, it's pretty aggressive. Let's go to the daily chart. Let me clean this up a little bit. Got that fair value gap in there. Multiple new week opening gaps. You could see how that was used. It has new week opening gaps all over the place. So we're dancing in between this June new week opening gap and this, group of new week opening gaps. Right, so, and there's SMT at the lows. DXY is rallying, so again, there's a massive cracking correlation. So what does that tell you, right? You want to know when to trade, when not to trade, right? Well, that's a pretty good indication that you should sit on your hands. Just some wise advice. I think drone liquidity today on the indices is weekly open. Weekly open from what? From when? This week or last week? I want to see SMT form on the higher time frame to confirm bullish narrative. Yeah, so we also, on top of that, brother, remember the 3 PDA rule? We got to have the 3 PDA rule as well, and then observe the intermarket relationships. And we start adding things. At this point, seasonality is extremely bearish for the indices, right? So with that being the case, the shift in quarter seems to have been bearish along with the seasonality. So we have to see things fully change, and we have to see DXY tank aggressively in order for us to start to trust price is going to turn around. Remember, we don't ever pick bottoms. And if we're trying to buy and be bullish right now, like fully bullish, we're trying to pick a bottom. And if we submit to that too early, that's how you get in trouble. Depends on what DXY does at the moment. We're having internal 1 hour buy side liquidity that hasn't been tapped yet. Yeah, true. True that. Right. DXY is continuing. Right, so we will see what takes place. If the DXY can stay below this midpoint and drop, then that promotes bullish indices. If DXY, however, chooses to aggressively just destroy this fair value gap, then we will see this rally on the indices as very short term in nature. Right, the Dow is falling, the S&P is falling. So the S&P is kind of wicking pretty hard off that low. Seems like the Dow's also doing that too. So yeah, 650 is coming, right? So we'll see what happens there at 650. And we'll go from there, you know what I mean? I like the S&P. S&P showing that it's possibly the weaker. It's the weaker one of the group. Yeah, so DXY is rallying. We got the bonds sweeping highs and coming off the highs. We see the yields just basically giving a little retracement. So we'll see what happens. And so the bonds are what's going to be impacted. This market specifically is what's going to be impacted with the fund rate this week. Well, actually, I think it might be the yields that are going to get impacted. Yeah, we'll see. So yeah, here we go. Let's see what the response is here. We got DXY rallying. Still got SMT at the highs present for the indices. All right, at the extremes, right? So there's still that larger SMT I pointed out. So let's see what happens here. Again, I've been favoring sell-side liquidity for the indices, right? Until something changes, right? DXY is still promoting that. Yo, send me your markups, Nico, in the private community. Send it in the either the July section or just the student markups. I want to see what you got going on. All right, yeah, so again, looks like we're pretty much in line with the price giving us this continued sell-side delivery. Now we have a shift in market structure. All right, so let's see what can take place here. We got this inversion for everybody got. So if everything here holds, if it smashes through, uses that as resistance, DXY continues to rally, then obviously we will be able to possibly find an entry in there and participate. All right, this here, let's look at this, see how this responds. Maybe an immediate rebalance. All right, if we could just pull up into this and DXY continues to rally, then that's justification for possible YouTube model sell. It may not come up into there because it may be really, really bearish because this is the heavier of the three, aside from the Dow. Yeah, we got the currencies falling too, so just another layer. Yields rallying. Bonds coming off the highs. See, so again, higher risk day, half risk because of the week. So if there's anything that you do engage, it's going to have to be with that backdrop. And this is not financial advice. I'm not a financial advisor. So yeah. See how that response is from that. So we should be able to get a sudden move away. If it doesn't, then it may be deceiving. We'll see. Again, everything looks like it's in alignment. Currencies are falling, DXY is rallying, at least for the time being. We do run the risk of it dropping down here because it's Monday. It could still manipulate, especially with all the news lingering. Right, so there's some things to consider, guys. See what happens here. We've got another fair value gap here as well. Midpoint of this order block has been violated. DXY still rallying. So yeah, we'll see. We'll see. It's got SMT at the highs from what I understand. But we'll see. Doesn't look like that idea is holding much significance. So you've got this fair value gap here. We have this order block, right? Shift in market structure. DXY rallying. So yeah, let's monitor what's taking place here. So yeah, this idea here would be banking on the fact that the SMT on the three indices is going to hold, possibly, right? The SMT here from this fair value gap. The other ones have hit it, but NASDAQ did not yet. So that's an active SMT at this time. DXY, if it does continue to go higher, then obviously that should be able to promote price continuing to fall. Because it's Monday, it may continue to manipulate. Because remember, Monday is part of the manipulation inside the weekly range, right? So again, that may turn into some type of problem. Right? Problem in terms of, not allowing price to just deliver cleanly. Now we'll see what takes place though. Not really interested in anything right now. Even though there are some things that we could be looking at, but no PD arrays are really holding at the moment for us to promote that we're ready for a sell. We are inside the 650 macro, which is like the only thing that's really in alignment. If this was going to drop, I would have liked to see it respect this. I don't feel comfortable knowing that price is just doing this. I feel like it may still want to go higher to get into a deeper premium. Go from this high to that low. We're just getting above equilibrium right there. So yeah, let's see what happens here. So I'm not interested in anything just yet. Just really not much. It's just kind of refusing to try to favor that sell side. DXY has been pulling higher. Bonds are promoting sell-off. Yields are promoting sell-off. Currencies are promoting sell-off. DXY is just not cooperating. Well, DXY is cooperating, going higher, but the indices are just not cooperating, especially since we have this SMT here, right? I'm assuming that will hold, especially if this goes higher. But again, it's Monday. It's not unreasonable for them to want to run a little bit higher, get price up into more of a premium, to then potentially drop. Like, we've taken out stops here. All right, price is taking out stops. There's a swing low here. Now if price rejects aggressively and gets down below here, then that would be a shift in market structure that maybe we can trust if DXY does continue to hold strength. So yeah, think about this too. Think about this. Where in the chart do you see something that you could have engaged for a buy, that you would have felt confident in? Given all the intermarket relationships, given everything that we've seen, not just because you see it in hindsight and, oh, there's a fair value gap. Like, paint the picture, right? Where is something that you could have felt overly confident that you could have entered, right? It's right now, there's a crack in correlation. DXY is rallying, indices are rallying. Right? At one point, they were all just doing random stuff, right? Let's go see, is the SMT now violated? No. So the SMT is still there. Still there, the bearish SMT. So 650 macro didn't really give us much. We're going into the silver bullet now, so let's see what that's going to turn into. So there is a 2-week order block here at this low. See, I'm not going to be interested in taking a short unless something gives us the evidence. DXY is going against a short idea, or it's going against a buy idea fairly reasonably, like a decent amount, right? So things, in my opinion, just there's not enough for me to want to say, okay, let's just start to buy. Because again, the higher time frame narrative, in my opinion, is framing out possible continued downside. Let's see, is the SMT? Yeah, the SMT is still present on the NASDAQ. And it's also present here, right? Higher highs, lower high. So not only is there bearish SMT on this daily perspective, right? There's also SMT down at the lower perspective, right? So SMT here. You go down here, we got SMT here as well between the Dow and the other two indices. I mean, look at this. There's SMT here too, right? Lower high. See, I'm not personally interested in getting in line with this run higher. So yeah, we'll wait. We shall wait. DXY continues to rage higher. We're going to watch these swing lows. And then continue to see what price wants to offer. No rush, no foul, right? No, you'll never be a profitable trader if you don't take a trade, or if you did try to push a trade, ill-advised, and you took a loss, use this time to watch and reflect and see what happens. And try to break down why you would have pushed a trade. Again, I appreciate you guys hopping on, as always, right? I'm feeling the new hourly candle, which is the new 4-hour candle, gonna wick highs one more time. Well, when did you say that? It seems like it might have actually done that. Let me see. I'm not sure. Yeah, so look right here. We have a swing low here. We have a run on stops. So let's see. Are we going to get an aggressive press below this low? See what happens. There's an aggressive impulse lower. There's a push. All right. Looks like we're gonna now kick back in. So let's continue to see. Let's watch. Shift in market structure. Let's see if the YouTube model will perform. Right? In this case, if we're ready to drop, again, we're off the heels of a bearish SMT. We would not want to see this retracement get above these levels. We want to start to see rejection. We're still inside the 650 macro. We're still inside a higher time frame bearish trend. So let's see what happens here. It's got an inversion fair value gap. So yeah, we got that inversion. Let's see how that responds to that. We do got this order block here. But again, I'm focused on price going lower because of all the things we've mentioned. So we'll see if that's justified. If that does not be justified and it doesn't work out and things don't respect that, then my overall narrative for the day or bias for the day is not going to be confident that we're going to go lower just yet. Here's a fair value gap in here. Let's see, is it going to punch back into there? See, because that would be a shift in market structure. See what happens. Well, obviously, we do see these equal lows down here. This DXY. Oh, my bad. I got a different one. We have the equal lows here. The DXY has punched into a daily fair value gap. So we'll see if that has any impact. Again, if it is going to be bullish week for the DXY, we don't want to see this really hold much at all. We'd like to see it just start tanking, right? But again, it could drop lower to sweep these lows out, which would not be wouldn't be too crazy, right? But you know. Yeah, so that, for the most part, at this moment, seems like it's playing out. We'll see if that's something that's sustained. Again, if this busts through this fair value gap here and gets above this inversion fair value gap, then I'm not interested any longer in even looking for shorts, because then they're playing games, right? So there's your 5 points right there. I didn't even notice. Right, just from this inversion fair value gap, before we got into this area, still offered 5 points. Here too on the NASDAQ, same idea. Right? Now 5 points could be justified, and you wouldn't even need more than that. And even if price was to turn around, but you're able to secure that based on the rules, based on what we see in price, I mean, that's good enough, right? Especially with weeks like this, like, you don't need to be hitting home runs, and you most likely won't hit home runs, especially on days like, or weeks like this. So yeah, let's see if it could break down through these lows. See, will it allow that? DXY is still raging higher. It's a good sign for the idea. Whoops. Swept out lows. If this can continue, then we should get more than 10 points from that, or more than 5 points from that. So it seems like price is favoring this idea I just pointed out before the fact, right? It's now getting inside this, so let's continue to see. First take profit, if it wasn't 5 points, it would be down here. Final take profit would be down here. I think that's like 10 points or so. Yeah, 16 points. It's not bad. Not bad at all. See what waiting does? We waited and waited and waited. Waited and waited and waited. You know. It's sad too, because a lot of people that hop on and they don't see a signal right away, they get off, some of them. Because it's really unfortunate that so many people are stuck in this junky mindset. Like, you get on, if an entry's not being talked about right now, then they lose focus. I bet you a lot of people were trying to buy today. A lot of people were trying to buy. And not knowing what we've discussed all throughout the morning, all those key elements that made it so we didn't trust bullishness was going to take place, all that stuff saved us, right? Favoring the sell side, right? All of this, all throughout here, people were probably contemplating, right? Oh, am I right? Oh, I'm probably wrong. Oh, I'm probably wrong. And then what do you know? Boom, 650 to 710 ended up presenting the opportunity to fall down and, snake people. So you could have taken partial at 5. You could have taken another partial at this low, and then final terminus would be the low down there. But mind you, if I was in this trade, I would have closed out already. right down below this low. I don't have to get down below that low. How many points is that? Like 10 points or something like that? Yeah, a little bit more than 10. 16 points down there. It's pretty nice. Not too bad. Not too bad of a run, if I say so myself. Not too shabby. Yeah, once price hits this low here, then that's pretty much the move for the day, to be honest. I'm proud of you, Nico. Good job, bro. As always. I know things can be hard sometimes, but hey, let days like this ramp up your confidence. Not gonna be perfect all the time, but you know, days like this will happen. You gotta be here in the game, ready for them to happen, and don't let the negative days impact you so much that you start doubting yourself. I never want to hear you say that again. It's okay to take breaks sometimes, but you know, you're better than you believe. I promise you. At times, right? You'll start to think negatively about yourself at times, not realizing that if you look back like a long time ago, 6 months, 7 months ago, or to when you first started, you'll realize like, damn, I actually know a lot more than I give myself credit for. Yeah, we may see seek and destroy here. It may pull all the way back. I mean, that's just characteristic of you know, what generally tends to happen at times. But we'll see. If that does improve to do that, then obviously it's just continued. We should see it be able to break down below this low. But we'll see. Again, if you look at this, I mean, bruh, seems like a pretty fair amount of points, right? If you ask me, right down below, that's 15 exactly, depending on where you entered in this fair value gap. Even if you got it just right there, that's still beautiful. Yeah, let's see. Let's see if we can get it to slide all the way down. If it gets outside of this fair value gap, if you were holding the trade, what the hell? Why did it just move like that? Yeah, if you were in this trade and you took partials and price runs back and breaks through this fair value gap, then you'd get out. You'd close it entirely. Because then that would be kind of suspect. Because we should be able to get it to slide. Should just continue to slide, especially with DXY rallying the way it is. Still not showing any signs of slowing down, so we'll see if that translates. But again, this is just something you must anticipate, right? Things may not go so smoothly because of the week that we're in and the fact that we're at the end of the month. Right, so once things start showing you after taking liquidity, once it starts pulling back on you, it could present us with seek and destroy because of the news that's hanging over us. So let's see. We shouldn't hang around this area too long. It should be able to just drop. If it doesn't, again, just further evidence that we got to get out. Right. This would be your last point of defense. Right. Just think about the trade management that we're going over right now. Okay. Again, this would have been plenty. This is what you should aim for. Right? Even half of this, that's enough to make a dramatic impact on your life, especially on this asset or in the NASDAQ especially. NASDAQ, I mean, it probably went way further. Yeah, look at that. It's probably over 100 points, to be honest. Close. And so... So yeah, it looks like that's going to be exhausted, I guess. Yeah, so we've got now outside of where I have felt comfortable holding. Right, so yeah, we'll see. So it's very, very tightly controlled in this way, right? Entering this entry, if you were holding it all the way through there, why would you let that go? Like, why in the hell would you see it break all the way through there, give you this much, and then let it go? That's like $500-600, maybe more dollars with one standard lot or one mini contract. Why would you just say, oh, I'll just give it back? Like, I don't care. Well, I don't need $600, $500. Like, why would you reasonably do that? Right? Just think about it. If you saw $500 on the floor, would you just say, oh, I'm good? Nah, I'm okay. Would you really do that? Just because you want to be rich and blow up your account and do all this stuff and do some crazy things in the market doesn't mean you lose focus as far as the value of money. Like, don't let your ambition cloud your judgment. Because it's another one of those things that isn't talked about enough. And it stops people from being profitable. It really does. Because they can't accept the fact that they just made that. They want more. Why do you need more? Is $500 not enough? A day? Or every other day, or however often? Is $50, if you have a small account, is $50 not relevant to the fact that you didn't have it to start the day with? Right? If you didn't have $50 and you just made $50 or $20 or whatever, I mean, that's a good thing. You know, it's not life-changing money, but it turns into life-changing money. But you have to take one bridge at a time. You can't just, even if you had $100K that you could trade with, just because you have that large amount of money, or $50K or $25K or whatever, just because you have that large amount of money doesn't mean that you're magically going to be able to trade that and be comfortable. Because now, instead of losing $20 to $50, you're now losing $200, $300, $500 a trade. Then what? If you think $50 isn't a lot now, when you make it, I mean, even if you lose $50, people start panicking. Like, oh my God, I suck and all this crap. Just imagine the way you feel about losing $50 or $20. Imagine that times 10. Or however much, right? Times, 10. Imagine. Especially if people work and they make like $2,000, $3,000 a month, working 8 hours a day. $500 out of your check, I mean, that's a lot. Like, if you miss a day or two and you don't get $500 on your check, I mean, bro, it's pretty painful, right? You'd be like, oh, fuck, I wish I kept the money. I wish I would have went to work, right? Think about that in trading, It's the same money, just made differently. All right, so yeah, so we now have a new intermediate term high right here. So it should be able to hold that if DXY continues to tank like this. We'll see. We should be able to get that low to be violated. Yeah, keep in mind these things that I talk about that are not specifically technical trading related. It's very important stuff, it really is. Some people think it's boring, but you know what else is boring? You know what else is painful and annoying to deal with? Losing money constantly, over and over and over, doing the same stuff over and over, wondering why, all the time, why you can't be profitable, or why it can't make sense. I think that's more annoying, more of an agonizing experience, right? So very important stuff. So we got DXY just raging, and you could just see how the NASDAQ and the S&P are just being held. It's just typical, right? It's to be expected. But again, we have our target down here. Hopefully it's generous enough to give it to us. Maybe not. It's at a new week opening gap right now, so we'll see if it stays below that. If it does, we should be able to have no problem. DXY still running. Still running. May top off here because now we've punched through the midpoint of that fair value gap, so it may be a cause for a retracement. We'll see. It's been a pretty slow morning, obviously. Like, look at how price is delivered and reflect on how we have thought about price, how we have thought about executing and not executing. The idea that was pointed out, the main idea, which was right here. All right. How it all started. Right, the fact that we waited, right? Price went higher, didn't seem like it was doing what we wanted it to do, right? It gave a fake out here, rallied up again to hurt these people, then shift in market structure after coming from a premium off the high to low above equilibrium. So the best sells come from above equilibrium. What do you know? The best sell came from directly at the equilibrium of the current range. Isn't that something? And then right at that area, we were still in 650 to 710 macro. Boom. Silver bullet. Right? So yeah, I think that is going to wrap it up. So I appreciate you guys hopping on. I hope you got a ton of value. Think about all these things that we discussed. If you have any friends that like trading and you think they would benefit from being part of this community, definitely share this with them so that maybe next time they can hop on as well. If you haven't liked the video and subscribed to the channel, definitely consider doing that. If you have any questions or anything about what happened today or any difficulties you'd like to discuss, just let me know in the comments or on Instagram and my DMs. Right? I'm always willing to help. And yeah, and what do you know? Right when we close out, price hits our level we've been waiting for. Right? Yeah, I hope this is also encouraging being on these calls. So, but yeah, we'll be back live on Thursday on YouTube for my private community. We will be live tomorrow and every other day that I'm not on YouTube. Right? So peace and love, you guys. I appreciate you guys hopping on, and I will see y'all on the next one.